Hello folks, it's Ishan Khan from class 11th of Firdaus Amrut Centre School, and today I'm going to present you my accounts integrated project which is based on the chapter Introduction to Accounting. And here we start. The first topic of my presentation is the definition of accounting. Accounting is a systematic process of identifying the transactions, measuring them in one common unit, recording the transaction in the books, further classifying them into subsidiary books, summarizing the result, interpreting the plans, and communicating financial information to the users so that they are up to date about the company's financial and market position. Well, now, we need to know why accounts is an art as well as a science at the same time. Art is the technique which helps us to achieve our desired objectives. Any organized knowledge based on certain basic principles is a science. Accounts is also a science as it is an organized knowledge based on certain basic principles. Hence, accounting is both an art as well as a science. Now, let's discuss the characteristics of accounts in a little more detail. First, identification of financial transactions and events. In this, we get to know that accounts only records those transactions which have money in them. Only money related transactions are recorded in accounts. Next is measuring the identified transactions. Accounting measures the transactions and events in terms of a common measurement unit. Now we have recording where all financial transactions are recorded, and then we classify them in particular books based on their types, which is later summarized. It involves presenting the classified data in manner which is understandable for both external and internal users of accounting information. Next, we have analysis and interpretation. This is done to provide users of financial data so they can find out the profitability and financial position of the firm. Now let's talk about the objectives of accounting. Accounting helps us in maintaining records. The objective of accounting is to record financial transactions and events of the organization in the books of account in a systematic manner, following the principles of accountancy. Determining profit or loss. This objective of accounting is to determine net result of a transaction for a period. Determining financial position. This objective is known to determine the financial position. It is known from the balance sheet. Facilitating management. The management often requires financial information for decision making, effective control, budgeting, and forecasting. Providing accounting information to users. This objective is to provide accounting information to users, both internal and external, who analyze them as per the needs. Next is protecting business assets. This objective of account is to record assets owned by the business, which enables the management to protect them and exercise control. Every coin has two sides. Accounting also have two sides. Let's have a look at the advantages and the limitations of accounting. Taking advantages first, here are they. Accounting provides financial information about business. Accounting is an assistance to management. Accounting replaces memory. Accounting facilitates comparative study. Accountancy facilitates settlement of tax liabilities. Accountancy provides evidence in court. Accountancy facilitates loan. Accountancy facilitates sale of business. Accounting is an assistance in the event of insolvency. Accountancy is helpful in partnership accounts. Accounting data is helpful in decision making. Now moving forward to the limitations now. Accounting is not fully exact. Unrealistic information. Accounting ignores the qualitative elements. Accounting ignores the effect of price level changes. Accounting leads to window dressing. Accountancy is a very skilled subject, hence all small records cannot be maintained by accountants. Here's the difference between bookkeeping and accountancy. Bookkeeping is concerned with identifying financial transactions and events, measuring them in money terms, recording them in the books of account, and classifying them. It is a primary stage, it is the basis for accounting. The objective of bookkeeping is to maintain systematic records of financial transactions. It is a routine work and hence is performed by the junior staff. Bookkeeping is mechanical in nature and thus does not require special skills. Now let's have a look at the points from accounting. Accounting is concerned with summarizing the recorded transactions and events, interpreting them, and communicating the results thereof. It is a secondary stage where bookkeeping ends. The objective of accounting is to ascertain net results and operations and financial position to communicate information to the interested parties. It being a specialized function is performed by senior staff. Accounting requires special skills and ability to analyze and interpret. Even though accounting ignores qualitative elements, we still need to know about the qualitative elements of accounting itself. So let's begin. Reliability. Accounting information must be reliable. Reliability of accounting means it's verifiable, free from bias, material. Relevance. Accounting information must be relevant to the user. Information is relevant if it meets the needs of the users in decision making. Understandability. Understandability means that the information provided through the financial statements must be presented in a manner that the users are able to understand it. Comparability means that the user should be able to compare the accounting information of an enterprise of the period either with that of other periods, known as intra-firm comparison, or with the accounting information of other enterprises, known as inter-firm comparison. Moving forward to the last but not the least topic of the day. In this, we are going to discuss about who are the internal as well as the external users of accounting information. First, the internal users, who are the owners, the management, the employees, and the workers. Now, the external users of accounting information, who are banks and financial institutions, investors and potential investors, creditors, government and its authorities, researchers, consumers, and the public. And that's all, folks. Thank you. It was fun having a presentation today, and hope I have a presentation next time. Good day. Bye bye.